Welcome back to Investing 4.0, Visionary Investing and Future Trends. Now, today we're going to take a look at our very first company and the very first stock. Now, for this one, it's important that you check out the last video about AI and where I explain the very basics of AI. Now, remember what Warren Buffett says, never invest into something that you don't understand. So check out last video about AI where I explain the real basics of AI that you need to understand how AI works, and then come back to this video and see what Appen actually does. Before we start with the Appen stock analysis and the company analysis, I have to mention that I am a stock owner, so I have about 60 shares of Appen right now. So I might be biased towards this company, but I'm trying to give you my best neutral explanation that I can. And please, as always, this is no investing advice. This is just my personal opinion, and you can do whatever you want with your money. So we're going to talk about Appens business model. So what do they actually do? I always want to say Apple, don't know, the name is too similar. So first we're going to take a look at the business model, then we're going to take a look at the history, and then we're going to take a look at the numbers, so the evaluation and also an outlook from my side. Appens business model is the following. Appen is an Australian company that is collecting and labeling data for AI training. For example, image, text, speech. You have learned about this last video where we talked about like deep learning and reinforcement learning and different data sets and how they are used. So Appen is doing exactly that. Appen is providing data sets for machine learning. They are working on topics like automatic speech recognition, computer vision, personal ads or advertising feeds, chatbots and virtual assistants. Now, what is important about Appen's business model is that they are based on crowdsourcing. Currently, and that's in the year 2017, they reached more than 1 million flexible workers that are working for Appen. In fact, you can go to appen.com and sign up for different projects, it's smaller ones or long-term projects, and actually earn money with it. So you can find a lot of reviews on YouTube actually how making money on Appen is. What is also important is that they are operating in more than 130 countries and 180 languages, so they are a real global player when it comes to AI data. Now let's take a look at what industries they work for. They are working for a lot of different industries because AI is really a big field that is becoming more and more relevant. And these are just the 6 biggest industries that they are working for. So the first one is tech. For example, they do like computer vision, proofing, search algorithms, and a lot of social media stuff. For automotive, they develop data sets for autonomous driving, voice and speech recognition. You notice that in modern cars, you can actually control a lot of things like the air conditioning with your voice or with speech. And then one of the most important things for AI is actually understanding and predicting behavior through, as I already mentioned, computer vision. So the radars and the cameras in the car are recognizing the streets and other cars and bicycles, for example, and signs, and are trying to read them and also are trying to predict where the other cars or bicycles or whatever is driving and moving. So that's important for automotive. Then we got finance. They do cool things for example, fraud detection, which is, I think, super important, but also, for example, risk management. Then healthcare. For example, if you have been in an MRI, they do medical imaging services. Or not services, but they provide the data, obviously. Then governance, as I mentioned in the previous video, they are supporting and giving data sets for the defense, for national emergencies, and also for law enforcement. And then last but not least, retail. I think that's the most obvious one as well, is like data analysis, ads in general, like e-commerce data. So you can see that the business model is actually pretty interesting. In my opinion, with having more than 1 million workers and flexible workers, screening those data and collecting them and labeling those data, they have a pretty good advantage about other companies. Since getting high quality data and getting a lot of people to screen them requires a lot of time to get to this number. I think they have a pretty, as I mentioned, pretty significant advantage when it comes to the business model. So now we know what Appen does. Let's take a look at the history real quick to know what they have done in the past and how they developed and how the company developed, because it's important for the future outlook in my opinion. Appen was founded in 1996 by Julie von Miller, and she was a linguist. So it all started with like text-to-speech recognition and basic linguistics. Then in 2011, they merged with the Butler Hill Group. And the Butler Hill Group was also a company that was focusing on language research, search functions, and text analysis. Then 1 year later in 2012, they bought Wickman Remmer. And this is a company that was working on tools and platforms for employee engagement, online moderations, and curation. Then 1 year later again in 2013, they rebranded because in 2011 the name changed to Appen Butler Hill Group, and then in 2013 they rebranded to the company Appen. 2 years later they had their IPO, so they went to the stock market under ASX in January 2015. And then again 1 year later, so you see a lot of steps, 2016 they bought Mendip, the Mendip Media Group, and the Mendip Media Group was working on transcriptions. Then in 2017, they bought the company LeapForce, and LeapForce is a company that was working on search algorithms and search relevance. So extremely important for Google and so on. And then only last year in 2019, they bought the company Figure 8. And Figure 8 is a company that does basically the same, also machine learning and training. So they are also using humans to go through data sets, collect and label them, and make them available for companies that might want to use them. So this is the recent history and the most important things that we need to know about the history. So let's go down to the almost last step, the evaluation and the numbers of the company. So I took the last 3 years or 2 years plus the current year into consideration. I know that there's more future outlooks, but I mean, even the one for 2020 is a prediction. I know that, for example, for the cash flow model, it's important to do those predictions, but since Appen is a company that is growing and that has a lot of potential expected growth, we don't know how accurate they are, so it's harder to predict for Appen. So I decided to stick to those numbers, but feel free to check out and everything that you find about Appen, about the numbers, and feel free to do your own evaluation based on the numbers that you prefer. Now, if we take a look at the revenue has gone up consistently. We have 360 million Australian dollars in 2018, then 536, and then this year a prediction of 680, but the prediction also goes higher. Some companies and banks actually give an evaluation of more than 700 million or 750 million US dollars. So overall, over the last 5 years, we had a revenue growth of about 60%, but obviously 2016, 17 have been very low. So that's why we have a big growth here. The EBIT, so earnings before interest and taxes, was 62 million, then 75 million in 2019, and the prediction for the end of this year is 93 million. So consistently going up by more than 20%. Then the cash, they're currently holding $75 million in cash and only about 23 million in debt, which is like they're holding 3 times the cash than their debt, which is good for a company that is still growing. And for me, what I was actually impressed with it's pretty remarkable if you see how much cash they have, considering how many companies they bought in the past. I think only a Figure 8, they bought it together with another company, was worth 300 million. So that's an important thing to consider in my opinion. 2 numbers that we need to take a look at as well is the PE ratio is varying right now these days. We see a lot of changes in the stock market prices, but it's varying between like 80 and 90. That's a pretty high PE ratio, considering that the others for companies that are doing similar work are about 25. And then we have a stock price currently of 32.4 Australian dollars, which in my opinion is pretty high already. I think the highest was 36 or 38 Australian dollars. We went down the last couple of days. but that's a pretty high evaluation if you ask me already. Now, that's some of the basic numbers. What I really like is the revenue and the EBIT, but we have to consider that for the PE ratio, and the PE ratio is pretty high, so the growth expectations are high, that Appen can currently not deliver this high growth expectation, and that the investors are actually expecting higher numbers here. So let's take a look at the outlook now. If you look at the PE ratio, which I mentioned is already high, last week I think it was about 120, this week it's 80, and I'm probably next week it could be 60 because the prices are currently falling. We see a bear market right now. So the PE ratio, in my opinion, might not be the best prediction for this company. Although we have to actually acknowledge that, as I mentioned, that the PE ratio expresses that investors are expecting higher growth numbers than Appen is currently providing us. But so besides the PE ratio, we need to take a look at different things. So here's my outlook for Appen. AI, in my opinion, is one of the biggest future trends that we will see. So I will obviously not mention this for every video because the purpose of this channel is to talk about companies that are working in these industries, but I had to mention it here because really I think AI is a big trend for the future. Then we have high quality data, and that is pretty cool to see that Appen has more than 1 million people working for them, so high volume, and they are also looking into really qualitative data so that the companies get the best data and no bad data, as they call it. I can also show you the model that they're working with, so it's good to see what they do. It's also good to see what the companies have to do with the data, so they are having a constant loop and exchange about these data sets to really improve them and have the best quality in the end. One of the key points, in my opinion, if we look at the outlook, is the management. In my opinion, it's a very good management team that is leading Appen. That is because we need to consider two things, and I mentioned it already. They have cash, they have good financial standing, they have a Piotrowski score of 5, which is not super good, but not low. The Piotrowski score goes from 0 to 10, and 10 means super good, and 0 means bad financial situation. So they're at the solid 5, everything good, and that's for a company that is still growing and about to grow much more. But what I think is good to see, and what I actually expect in the future, is they're getting more cash positions, so they're getting more and more money. And what we saw in the last years is that they're using this money to buy companies that will accelerate the growth even more. I think Leapforce and Figure 8 have been great examples for acquisitions that really make sense and can really accelerate the business for Appen. So that's what I want to see. And in my opinion, yes, the share price is pretty high already. If you look at the historic highs, and they were just reached about the last 2 weeks. Currently we're falling a little bit, but I am using the dips to buy a bit more. In my opinion, if the price goes below 30 US dollars, sorry, not US dollars, but Australian dollars, maybe even 25, I will buy more. Now, in the end, I have to say Appen is a risky investment. The investors, as you can see with the PE ratio, are expecting a lot of growth, and currently Appen is not delivering as much growth as the investors want to see. I personally think that with all these acquisitions and possible acquisitions in the future, they are set up to grow significantly, but they have to deliver. So Appen might be a stock that you want to buy if you want to be a bit more risky, if you like the trend of AI, and if you have the possibility to buy some of the dips, so observe the market and then see if you can find a good entry into this position. Otherwise, I would observe Appen, I would see if they are actually making more acquisitions that are good for the business, and wait a little bit and have it on my watch list. So that is my recommendation. Again, I'm not a financial advisor. It is your decision what you do with your money, but that's what I'm doing. As I mentioned, I'm already invested, but I'm using the dip. Maybe if it's going below 25 Australian dollars, if we see that, I'll buy a little bit more, but I will observe the stock closely over the next weeks and months. So let me think what you think about Appen, what you think about this stock analysis. I would like to see a thumbs up. I'm putting a lot of work into this, as you can see, and yeah, I hope you will subscribe to this channel because it's really, really small, and I like to grow a bit higher, get quality discussions under this video, and yeah, that's what I would wish from you guys. Yeah, if it was fun, leave a like and see you next time.